Hello everyone, this is Alexander Nikolov from trendrecognition.com. This is a very brief video update on the trends of the Forex markets, of the major Forex markets. So let's start with the euro-dollar. As you can see from the daily chart, the trend here is higher. That's the main message here, that the trend is higher. There is a nice pattern of higher highs and higher lows. But what we can see here is that the moves from the July 2012 low, the moves from the last year's low, are actually corrective moves. This move is not clearly corrective, but this second move is clearly corrective. So that means that this pattern and this move higher is going to take the form of either kind of a neutral triangle or most likely a diametric formation. These are new patterns that were discovered by Glenn Neely in the 90s. So let's see what we have here on the weekly chart. On the weekly chart, we have a nice move up as well as from the July 2012 low. And as you can see, based on the weekly chart, on the broad sideways consolidation here that we have, we can expect a move up toward 140.45 level or even toward 145.70 level in the next several months. But that's a long way to go. Right now, let's focus on the on the short-term moves. And here, since the market was repelled from the 137.20 Fibonacci level, notice how well this level has contained the upside here. Now we are in a pullback that is most likely to take a few more weeks to complete, to develop. And I expect a similar phase here, a similar pattern here, not exactly in the same way as the one here, but I expect something similar, at least in terms of time. So the market will either spend some time trading sideways, will stage a deeper pullback here toward 132 or even toward 130 level before it can resume this medium-term uptrend that is, of course, still intact. So that's my view here. We will likely have a huge, very big trading opportunity in the next few weeks, but right now probably this is not the best way to establish a strategic position here. Let's go to the British pound and let's start with weekly chart. As you can see from the weekly chart of the British pound, we still have this sideways consolidation that have lasted for so long here. From actually it started in early 2009, and most likely this sideways consolidation, I believe, has developed into a contracting triangle. Now, is this contracting triangle complete? I feel so, because the speed of this decline from the early January top is fast enough. This decline is fast enough. So I think that most likely we are in the very beginning of a huge move down that will eventually bring losses to below 135 level. But until we see a break below the 152.60 level, notice this is really important. It is a chart support. It was strong support here in 2011 and 2012. So it was a chart support, and it is also a Fibonacci pivot level. So until we see a break below this level, we cannot be sure that this sideways pattern is complete. As before, on the upside, the key level is 163.86 level, but I think the major focus now should be on the downside, and I expect that eventually this 152.60 level will break down. Going to the daily chart, you can see a nice, so far, a nice impulsive wave, 5-wave move down from the early January top of this year. And as you know, I turned bearish right here near 160-170 level on our short-term update, the update that I provide each weekend. And now I think it is time to cover those shorts. Why? Not because I'm bullish here, As you can see, the daily chart is really negative. Prices are all below the declining 21-day and 100-day moving averages, and below the 156.80 Fibonacci level. So the trend is obviously down. But I think that first we have a big profit here, potential profit, if you are short from these levels here, 161, 162, 160 area. So first the profit is big, and also the market is oversold, and most importantly, there are potential 5 waves down from the top. So that doesn't mean that the market will reverse higher, but most likely we will see some kind of a recovery before the bears can push the prices lower to eventually break below this key support at 152.60. So the trend is lower here, but taking at least some profits seems reasonable here. And finally, going to the weekly chart of Japanese yen versus US dollar. Here, this trend is really spectacular here for the US dollar. And as you know, I turned bullish first on the weekly chart back in March of 2012, almost a year ago, over here, when the market confirmed that this move down that lasted for so long was likely over. And then on the short-term time frame, I turned bullish here near 79.65, 80.60 level in this zone, and basically I have been bullish since this period here. And you can see that there is a nice bottoming formation here. There is also an inverted head and shoulders pattern here, but also this is kind of a base that broke out to a new bull market. So the main message here, we are in a bull market. It's very strong. The next potential level, the next potential target, upside target, the short-term targets are at 95.30, 96.70 levels. Eventually, I expect a move higher toward 99 level, which is the next Fibonacci level of similar significance as to the 93.12 level, which apparently didn't act much as a resistance, at least for now. So the weekly chart here is extremely bullish. I believe we are in a long-term bull market here for the US dollar that will have many months and years ahead to develop. Of course, that doesn't mean the market will always go higher. At some point, we'll see a pullback here because the market is obviously overextended on the upside. And going to the daily chart here, you can see the uptrend is really strong. And right now, if you're not a subscriber, I can tell you that I'm still bullish here. I have a bullish position, and I think the main support level, the first support level, is here over here at right at 92 or slightly below 92 level. Why? Because you can see here a cluster of support, of chart supports, and also notice the 21-day moving average is approaching this level. So a stop somewhere here or below the 21-day moving average is reasonable here. And as you can see, the trend is really strong, and as long as the prices stay above this 21-day moving average, we can expect higher prices toward the objectives that I pointed out on the weekly chart. Should the prices decline below this moving average, we'll have a signal that finally a short-term top is in place, and we'll see in this case some kind of a pullback before the long-term uptrend resumes. That's all for today. I just wanted to make this quick video update for you in case you're not a subscriber and you don't know my thoughts on the Forex markets. If you want to receive these outlooks, my daily strategies, and my weekly strategies for the major Forex pairs, go to my website, trendrecognition.com, and subscribe for one of the membership packages that is just right for you. Thanks for listening and watching, and I'll be talking to you again later. Bye.